Hello, hi. My name is Jerry Miller. I'm the founder of Trendsignal, the trader education company. This is another part of our Monday Market Insights series, and we're going to be looking at global equities and specifically US equities, which had another positive week. Um, let's just have a look. First of all, risk on mood, often referred to in by economists and analysts talking about risk on. Risk on basically means investors and traders putting their investments into slightly riskier assets. Believe it or not, that means equities. So when we have a risk on move typically means that equities are going up, bonds are going down, commodities are going up, and the dollar is going down. And we've seen that over the last few weeks, actually. If we just have a look at the chart on Charting Center for you for the S&P 500, I'll show you. So here we have a chart of the S&P 500, and I'm looking at the weekly chart. And as you can see, we're on Monday morning now, but actually on Friday, close of business last Friday, the S&P 500 had another great weekly move, up nearly 3% on the week, and that's the fourth week in a row that you've seen these gains. July was particularly positive for US equities. Anyway, but that move and mood, this risk on mood, has definitely persisted. And I think the main reason is that the inflation data that came out last week recording a number of 8.5%. We're expecting 8.7, and quite a bit better than the 9.1% from the previous week. And it's all down to energy prices moderating. And remember, when crude oil comes off, it immediately affects the price of gasoline in the States. And I think that was the main driver for the fall in inflation in July in the US, which of course has helped the markets recover. And I think there's a feeling now that despite the US Federal Reserve, that's the US central bank, still pushing ahead with rate rises, the feeling is that it's not likely to cause a recession. I know the US had 2 quarters of negative growth at the start of this year, but in fact, with such a strong labour market, the US is not in a recession at all. But the markets are concerned that the rapid rise in interest rates that is happening because of the Federal Reserve's policy to tackle inflation. There was a feeling that it could cause a recession, but it looks that's the mood has changed. The feeling is that it won't cause a recession. At least that's the way the markets are behaving. Anyway, let's get back to the slides. So, um, yeah, as I said, a record straight, uh, fourth straight weekly gain. Not just in the US, we've had some strong moves elsewhere as well. But in Europe, it's a little more mooted, partly because of the energy crisis there. But remember that uh, energy, like most commodities, are priced in dollars. And with the strong dollar that we've seen for most of this year, the actual cost of energy, the likes of crude oil in euros, crude oil in sterling, actually has not come off anything like as much as it has in dollars, obviously. I remember in the US, there's no exchange risk because there are dollars and everything's priced in dollars. But in the UK, uh, households are struggling. We have a big reliance on gas central heating here in the UK. In Europe, uh, states have been rushing to secure enough supplies for the winter. Germany has now succeeded in getting 80% of its storage facilities full ahead of the winter break, and they've been tasked with getting 85% of them full by the end of September. This is what's pushing all these prices higher, and you've got electricity prices also hitting record highs last week in Europe as the heat wave is really increasing demand significantly. At the same time, the capacity to generate electricity has fallen because of the heat wave as well. So it's a bit of a double whammy, really. But yeah, things are more challenging in Europe than they are in the US, that's for sure. So the outlook for US equities, I keep on reminding people that this is August, and August is a month that tends to have less liquidity. You get a lot of institutions, big investors, they're all on their annual break, and you tend to have less activity in terms of volumes going through the markets. You can still get big moves, But I don't think this is the time when you're going to see a change in the current narrative that um, the US economy is likely to escape a recession because of these rate rises. But of course, that's now. Things could change. We could see the data start to worsen. And already on Monday morning, as I speak, there's a bit of a risk-off move. We got some pretty bad data on industrial production and retail sales in the US, sorry, in China, and that's affected the markets first thing on Monday morning. So the dollar's stronger, equities weaker, and commodities weaker as well. That's the ebb and flow of markets for you. Anyway, thanks very much for listening. All the best. Bye for now.